Amanda Cassatt, and this is Endgame. 1% of US dollars are now tokenized. Isn't that crazy?
The real-world assets in the Ethereum ecosystem went from 2 billion supply to 6 billion supply. Stablecoin supply sits at around 150 billion.
We have at Serotonin been building a thesis that I think we're going to publish soon called Crypto's Middle Class. It's not really those whales. It's really the middle class. It's really the mid-sized fish. That's what you've been seeing?
All crypto founders think about how crypto fits in with AI, and no AI founders think about how crypto fits in with AI. And we raised $80 million. I think we're like third unicorn startup in Norway. The good thing about crypto is it's pro-innovation, it's pro-building, it's global. And I think a sort of global system for anyone to innovate and create freely is amazing for mankind.
Running Dune, you see a lot of analytics and you see exactly what's actually performing on chain and what's not. Maybe you can start off by telling us what has surprised you, what's actually working out on chain and what's not.
What's interesting about, I think, conceptually about on-chain metrics is you can see everything, right? So it's very different from like any other industry because a blockchain is like a public backend that anyone can inspect. So you actually can look into any product and see how it's faring. So you have just unprecedented transparency and access to this information. You can see on chain, it's like things can grow extremely quickly, but it can also go away very fast. And I think the most obvious has been NFTs, where like at the peak in 2021, there was like 5 billion monthly trading volume, and it went from almost nothing a year earlier. So it's like historic rise of a chart across like any sort of industry, more or less. It's plummeted, and it's one of these things where it's actually hasn't recovered that much. There's been a couple of months where it's touched 1 billion, so a fifth of the previous peak, but mostly it's in ballpark like 100 to 200 million. So I think NFT is a relatively big chunk of the narrative, or like it's getting mentioned a lot, but it's like the traction has really fallen a lot. Then you have other categories like DEX trading has been passing previous peaks in 21. So there's been a dip, but then it's actually been...
Wow, so we're even higher than 21 DeFi summer.
Indeed. So that's a category that's actually been through a down valley, but now actually there's more traction than there used to be. Maybe even more excitingly, we do see sort of, again, it's a big narrative, but the data also support it around stablecoins and real-world assets. They are growing. So real-world assets in the Ethereum ecosystem, so all the L1 or Ethereum L1 and L2s, went from 2 billion supply to 6 billion supply over the last year. It's basically a 3x. So it's like nice looking steep chart. Stablecoin supply, I think in the Ethereum ecosystem sits at around 150 billion. And that's been sort of went up in 21 and then down, and now it's up also past the 21 peak. So,
it's wild.
Yeah.
1% of US dollars are now tokenized. Isn't that crazy?
Really? Wow. Okay, yeah, that is huge. And I think that's so good to see for an industry that, very tangible, real utility. And seeing the Robinhood announcement that was here, getting stocks on chain, and then not only in theory on chain, but also from someone that has millions,
distribution
users getting access to it as well. Stripe obviously doing a lot in stablecoins, also like I think a massive testament to blockchains being truly useful, and even for sort of boring use cases like just moving dollars around the world, or getting yield on dollars. So several of these things are really playing out on chain as well. Like it's not just headlines and announcements. Like we can see in the data that it's growing, and it's growing past the 21 peaks. And I think many people, maybe in 22 and 23, or especially post FTX in like late 22 and 23, were like, maybe this thing is not happening after all, and maybe all the things will just go away, and the metrics were way down. But there's still many use cases that are now exceeding 21 highs. Also on
Which are the other ones exceeding 21 highs? So we have DEX volume, we have RWAs, which I mean didn't really have 21 highs. We obviously have stablecoins. Any other categories in there that are the best they ever have been, or that you see just getting rapid acceleration?
So definitely, I mean, Solana as a whole, and you can see a lot of activity on Solana. Many of the things happening on Solana are some kind of variation of what's been happening on Ethereum.
Right, and so it's hard to tell from just the fact that the chart is going up that it represents, genuine activity.
Yeah, you see, I think what's interesting
Or innovation happening on that.
Yeah, right. It could be, I think there's a lot in this industry that's like repackaging of something and just like presenting it as a new narrative, and then it becomes, you get activity, but you don't necessarily get like net new things. But what's interesting is you can see, I think one interesting metric or set of interesting metrics to look at is activity, so transaction count or like address count, but also volumes, which tell you more about like real economic activity, how much money is being like shifted between addresses and whatnot.
Because it could just be the same addresses passing something back and forth.
Yeah, so we have some metrics on this, but we also have some methods to try to avoid or like detect some of these things. What you can see now is that in the Ethereum ecosystem, there's a lot of talk about L2s versus L1 and whatnot, right?
Right. I mean, you look at actual Ethereum transaction volume, that's a chart I'm very familiar with. And there's obviously this DeFi summer peak, and we haven't returned to that same peak yet, even though after the decline, it's heading upwards in the same direction. What do you think? Are the L2s eating the L1's transaction volume?
So in terms of activity, yes. So actually now there's 85% of all transactions happening in the Ethereum ecosystem is on L2s. Wow. So there's only 15% on L1. So, that has really played out. And I think this is also, there's things to discuss and there are dynamics with the fees and whatnot, we can also talk about. But in a sense, it has been successful in the way that was the play Ethereum went for, and it has played out, right? It wasn't clear or necessarily obvious that L2s would become a thing, or like that it would, so to some extent I would say it's like, okay, it's successful in the sense that there's real activity on the L2s. One interesting caveat though is the volumes are 85% on L1. So the economic value is still vastly sort of bigger on Ethereum L1. So 85% of like dollar value moved inside of the system, whether it's in stablecoins or in DeFi projects or what have you, that still sits on L1. So the activity moved to L2s in terms of the high frequency stuff, but the value of that is much smaller.
Because if you're moving a really large volume, which you do only very rarely, you don't care about that transaction fee. You care about being locked in some L2 that you can't get out of for 7 days, or having to use an intense-based solver network to do it, which maybe you don't want to do for some reason.
Exactly, right? A lot of business and a lot of finance, it's very whale-driven and it's power law, and the few actors that have a lot, move an outsized portion of the market, if you will. So that's really playing out. But then, of course, you have another interesting fact, which is L2 fees to settle to L1 went from right before the new Ethereum version in March 2024, where blobs were introduced. Indeed, yes, fun word. The L2 spent $40 million in February or March 2024 to settle onto L1. And then the blobs were introduced and it went to basically zero. And in the last 12 months, the L2s have generated 150 million in fee revenue, and they settle virtually for free on L1. So they basically have like I think we did the math, it's like Base has a 98.5% margin on their L2 business, which is sort of unheard of, having virtually 100% margin for what you're doing.
But they're competing with the other L2s to bring fees down to as close to zero as possible.
Yeah, definitely there's competition there. Base now actually have 80% of the fee market share in L2 space. So in terms of...
and Arbitrum is second behind it?
Arbitrum is second. It's a little bit of a or like smartphone market dynamic, where the analogy being
Apple versus the Google
exactly,
software.
yeah. And so Apple has an outsized share of the profits of the industry. So the iPhone, I don't know the exact number, but it's like in the order of 80-90% of all smartphone profits accrued to Apple, even if the share amount of phones sold is much bigger on the Android side. You can currently kind of see something similar in L2 land, where the activity is actually 30% base and 30% Arbitrum, or the volumes. So they're actually head-to-head in the lead versus, and then there's a bunch of others, so, you know, there's actually many sort of credible players. On the fees, base has gone from 30% a year ago to 80% now. So they're really dominating on the fee side, but maybe competition will like drive that down. Right now, base is sort of very profitable and very dominant in fee share in the industry.
Super interesting. I mean, we have at Serotonin been building a thesis that I think we're going to publish soon called Crypto's Middle Class. And it really goes along with, I mean, we use you guys, we work with Dune, but this idea that there are these whales and they have this very specific set of behaviors and activities. And then there are these smaller accounts that do this higher volume stuff, and that actually accrues a lot of fees. And that actually is producing a lot of the kinds of outcomes that we talk about in the space right now when we talk about revenue. It's not really those whales. It's really the middle class. It's really the mid-sized fish. That's what you've been seeing?
I don't know directly, but I think it maybe checks out with the data. You know, the base fee does indicate that, or it could be that your thesis is right. You know, it's like the middle class doing a lot of activity on base, and so they only have 30% of the volume, but they actually do get a lot of the fees because the high activity. And you know, I guess the interesting thing about blockchains and how these systems are designed is like you don't necessarily pay much more in fees even if your transaction is bigger, right?
Totally, exactly.
It's decoupled. So versus in the bank where you might pay some percentage of the whole transaction to do it. So I think that could make sense, that it's actually like a lot of the fee driving forces are, and I think you see this with Solana versus Ethereum as well, where the Solana fees has been high. Obviously, like the fees in the Ethereum ecosystem has gone to the L2s. And I don't have the exact numbers for Solana, but I think they have been often, at least in recent sort of half year or something, been higher than like any Ethereum in the Ethereum ecosystem, right? And again, it's like a high frequency, low value environment typically.
Right.
Yeah.
NFTs are obviously this great example of something that has great numbers and then falls off. Everyone understands, I think, that it's fallen off and that certain parts of that have product market fit, but mostly that's fallen away. What do you think are the biggest mismatches today between hype and enthusiasm and actual data? Where do you think that people are wrong in how they talk about certain kinds of projects versus the real figures?
First of all, I think it's important to call out that, you know, even if some form factor of, you know, something didn't work out, doesn't mean that it, you know, can't come back later or be, you know, right? Maybe totally. NFTs will really find its fit.
Well, NFTs are just a technology, right? Non-fungible tokens used for all kinds of things. Like Mega ETH used an NFT when they enabled everyone to buy into their token sale. Everyone had to buy an NFT for 1 ETH, and that gave you permission to get the tokens, right? And so NFTs as monkey pictures, maybe that incarnation will or won't come back, but just that technology being used in some way, sure.
Yeah, absolutely. So sort of with that being said, I think there are definitely a few things that hasn't lived up to the promise, and NFT being
and that could of course change, right?
Yeah. This whole sort of data availability sort of narrative has also proven not to have clear demand. So if you look at the data, so Celestia and Eigenlayer, and these were basically saying we can sort of break out pieces of Ethereum and make it easy to, or like cheaper to do certain things. You could have only like the verification of the computation on Ethereum, but all the data storage and other parts you sort of pull out. That was, at least last year, like a big thing, and a lot of people supplied and sort of restaking, so they supplied their ETH and whatnot to like secure more systems. But the demand wasn't there. So it was just like a big supply wave of sort of security and access, and then it hasn't been really used that much. You know, I think that's one of the things that's been like a big narrative, but then hasn't really happened. Another almost opposite example is, or depends on which actor you're looking at, but like the meme coins, you know, pump.fun revenues are actually massive. And
Still.
Yeah, it's been surprisingly sticky. It's still, I don't remember.
Despite getting banned from X.
What? Yeah, I saw this, yeah. Maybe it's they get the Streisand effect, who knows. You know, it's actually been a very massive business for them to power this, and I think you maybe would have expected meme coins to just really come and go very quickly, but it's actually been, you know, many months where they make a lot of money. But on the other hand, they have this thing called graduation rate. So I can't remember the exact numbers, but if you launch a coin and it reaches a certain trading volume, they move it on to like a proper decentralized exchange.
And there's a lot of gaming that also.
I'm sure it is.
Especially in meme coin land. There are little cabals of them that kind of game them into reaching those thresholds.
I do not doubt it. But that graduation rate has been going down, I think. So it's like
interesting.
At one
for meme coins or across the board?
For meme coins on Pump Fun, as far as I know. So it's been down to, I think it's like in the order of 1.5% or something like that. It's been like sliding a little bit down, not like a very sharp drop. You know, that's also maybe not a great indication, you know, for these coins, that there's a lot of them that just never becomes anything, and it's not getting better over time. Yeah.
What about DPIN?
I don't have a ton of data on the top of my mind on this, but I know Helios was like a little bit of an NFT style story back in the days, but I think they're still doing well and have real usage and growth now. So I don't have the numbers, but I do think there's definitely examples of this really working and happening and getting real traction.
What about the AI crypto projects? I think about, you know, the AI16Z, Zerebro, those kinds of things.
Definitely been a big narrative with crypto AI. I think one hot take I heard a while ago, you know, when ChatGPT and everything was blowing up, that all crypto founders think about how crypto fits in with AI, and no AI founders think about how crypto fits in with AI, which I think was probably true at the time. I do think there are interesting intersections. It's probably a little early to have clear data on what's working and not. I think there's something very interesting around, you know, agents having access to money, being able to pay each other, and it feels like crypto is like a natural way to enable that, and that it's kind of hard to imagine AI agents really being able to have their own bank account and do these things, but it's quite easy to imagine them having their own wallet and paying each other for things on chain. So that feels quite sort of an exciting space to me.
But there's nothing to show for it yet in terms of on-chain analytics.
Not that I've seen, at least.
We all know that we're going to live in a world where we can use an intent spoken aloud, written somewhere, maybe even thought, and then have a trigger kind of an automatic set of reactions that has interstices between things covered that then executes that perfectly. We all know we end up there somehow. The steps to get there feel very muddy.
Yeah. And then, I mean, that's how technology evolves.
Totally.
So it's fine, I guess. I also think there's one other interesting aspect of crypto and AI. You know, a lot of crypto is like a financial toolkit that, okay, you can like find prices for longer tail assets with like a Uniswap, and you can do options and like a lot of things that in the sort of quote unquote traditional world requires a lot of lawyers and a lot of like, you know, overhead to get done. However, I think what we've also seen is consumers and like most folks don't want to deal with the complexity of a lot of these financial toolings, right? But what's kind of interesting is if you have AIs sort of controlling wallets and being able to interact on chain, you know, then that sort of mental overhead is maybe not there anymore, or it's not there anymore, because the AIs are sort of by definition sort of an abundance of intelligence,
Totally.
right? And so maybe they can actually leverage a lot more of the on-chain sort of toolkit because they can say, oh, actually, sort of my, master maybe want to go to the cinema next week. Maybe I should buy like an option to go to the cinema, but not actually buy the ticket.
Yeah,
or
very
something like-
sophisticated little things.
Exactly. And you can sort of do a lot more sophisticated financial interactions. And the constraint of like the human consciousness is not there anymore. And that could be an exciting thing for sort of the crypto space, that more of the toolkit can really actually be utilized at a bigger scale.
And I can only imagine how AIs themselves would use Dune, or maybe do you think they would go directly to the blockchain for their analytics?
No, I think we have an important role in that. We try to make crypto data like practically easy to work with. Running a node, fetching all the data, managing data pipelines is inherently very messy and a lot
Totally.
of rerunning of things and all of that. And we try to aggregate it all, clean it up, and make nice interfaces, whether it's in-app or through APIs and like MCP stuff for AIs. And so we definitely think that if an AI wants to understand what's happening, whether it's like for trading use cases or sending money or routing things, just having very sort of zero overhead, zero operations access to this data is quite powerful and useful.
Makes sense to me. To switch gears for a moment, what you're finding as a result of looking at Dune's analytics to your story of starting Dune. You drew some attention on X last year. That hasn't stopped, that's continued, about your founder story coming from Norway. And you wrote a piece called Norway Shrugged. Take us through why you wrote that piece and your story of what happened.
Yeah, so it's a little bit of a long story, but me and my co-founder were Norwegian. We started Dune in Norway. For a long time, it was a big grind with very little money and very little salary and all these things.
What year did you start it?
We started in 2018. Crypto was not a hot category at all back then, and we had some experience from like a tech company, but we were basically nobodies, and especially pre-COVID, being from a place like Norway was like kind of very turn off for VCs and whatnot.
Sure.
You were not in one of the right hubs.
Even in crypto?
Even in crypto, yeah. It was like SF or Berlin or London, were the typical places you ideally should be based. We have our friends and family, and we were from Norway. We like Norway. So we just started building there. Didn't know how this company would turn out sort of anyway. So we did that. We eventually managed to raise some money. We had like many months without a salary. Then we made a little bit of money. Eventually we found success in basically DeFi Summer. Then we had been grinding for over 2 years. And then suddenly the product we had like the right product at the right time in the right market. And we had built up a community of great data analysts over the last couple of years that really were good at dissecting all the things suddenly happening in the space. So we're in a good position, and then we managed to raise a lot of money in like a little over a year. We went from sort of just having done a pre-seed to having done like a seed A and B, and we raised $80 million. So that was sort of, for the company's sake, fantastic. We were also then one of, I think we're like the third startup unicorn in Norway. So historically, Norway has been very oil heavy, very few tech companies.
One of the big sovereign wealth funds.
Has a big sovereign wealth fund indeed. So to take the Norway story sort of on the countryside,
Right.
The country found oil about 50 years ago, actually managed that really well, first taxing the oil companies very heavily so that the wealth coming from the oil would go to the people. Then in the late 90s, they started the oil fund because the politicians saw that they couldn't spend all the money every year. So just
What a difficult problem.
but,
I think
fantastic.
a lot of Americans would be happy to have that problem.
You have the opposite problem, right?
Yes, we do.
But fantastic foresight and sort of austerity from the politician to say, actually, it's irresponsible to spend all of this money. Let's put it aside. By the way, oil is not going to be here forever, so let's rather diversify, put it in global assets. In theory, then the money can grow and become useful for further generations as well. This happened in the late 90s. Then the fund grew a lot because the oil revenue was very big. This has also accumulated by being exposed to global equities and whatnot. What's happening now is that they're only taking the profit of the fund, but the profit of the fund is so big that it's an enormous amount of money. And then you also have fairly strong socialist ideas in, like, especially the left-leaning side of
Which
politics.
pre-existed finding oil.
Yes.
Right.
This kind of like the Nordic model.
Yeah.
However, there's one particular tax that Norway has that, for instance, Sweden removed in 2007, and it's very uncommon, but it's a wealth tax. So it's a 1.1% tax on your net wealth.
Americans have been objecting to various proposals about that for a long time.
There was
I
know there was a debate.
There was a Biden-era proposal about that.
So an unrealized capital gains tax. And basically when we did our big funding round, that became a big problem for us because if you're not public, it's on the book value of the
It basically kills any startup.
Yeah,
because no one has the cash to pay a tax on the value of the startup.
Indeed. So I was faced with about to face a tax bill that was like many times my net salary. I realized like I cannot pay this tax, and so basically I got to move. And so me and my co-founder, we ended up moving to Switzerland. A lot of others have moved to Switzerland, also sort of entrepreneurs, investors from Norway. I think it's frankly super sad. Like I have never worried about paying taxes, or like if I make money, I can pay taxes. It's fine. Like I have never had an issue with that. And we were in Norway for 4 or 5 years, so It's not like we tried to avoid the Norwegian system or Norwegian taxes, but you just been given this impossibility. And the problem in Norway is that since there's so much oil wealth, there's actually no short-term financial pressure on the politicians to change this.
But it's funny because somewhere like Dubai, Abu Dhabi, a place, or Saudi, these places that have traditionally had wealth that comes from oil, they're so aggressively diversifying into technology.
Yep.
You would expect Norway to think similarly.
The total opposite, I would say, in Norway, where we're just like actively harming any opportunity to build new industries. But it's definitely coming from like a point of very strong socialist ideas, where it's like, oh, they're rich, they should just pay the taxes. And if you tell them practically, this is how it works, and by the way, being rich is sort of a bit of an ambiguous thing. Like
paper wealth.
It's paper wealth,
right? You can't spend it. You can't buy a house with
illiquid and all these things. This sort of became a bit of a story and went rather viral. And then I ended up writing a post about all of these things and how I think basically Norway had like 50 good years of managing, finding oil, giving it to the people, that revenue, establishing the oil fund, being sort of sensible of spending. And now I think that has basically ended. Like now the wealth has gone to has corrupted the operations of the country, sadly. And you can see it also, the state is becoming very bloated versus like Sweden and Denmark, for instance. Historically,
a lot of administrators, a lot of bureaucracy.
A lot of bureaucracy. Now 60% of GDP is the state in Norway.
Wow.
And just a few years ago, it was about 40, on the same as Denmark. And Denmark is about 40. Norway has kept creeping up. And there's extremely generous and abused systems for sick leave and sick pay and these things. So the workforce is people are not very activated or in the workforce. They can be on sick leave money for extended periods of time. And so, it's really sad to see, because I think Norway is an amazing country and I would have loved to live there. And I would have loved to build a company there, but the way it's set up now, it's very hard.
It's so surprising to me that there's no one that you're able to contact and sit down with and have a normal conversation where you can explain the difference between some valuation by VCs on paper and actually having the cash to pay a certain tax. It's kind of shocking to me that there's nobody that you can find to have that conversation with, or that, after your post blew up so much, that there's no one present to have a conversation with you about it or to address it. I'm curious, did anyone ever reach out after that post? Is anyone working on this?
So I have had a chance to talk to a few politicians, mostly in the opposition, not the sitting government, but I have actually, not that long ago, I did go to like a debate on like startup politics. I met one of the sitting in parliament representing the Labour Party, which is the current government. And it was literally like the representative sent to a startup sort of setting to represent their party. And I went up to him and I said, hey, this was my situation. I lived, by the way, like I lived in a cheap part of town in like a 2-bedroom apartment, the same apartment I was in before we had any money. I didn't have a lavish sort of personal wealth or anything like that. And I told him like, hey, like I got this tax bill that's like many X my net salary. How am I supposed to pay it? And he literally said, I don't know. I can't tell you. So there is this absurd situation where he's like literally verbatim telling me, no, you cannot pay this tax. And he's the guy, his party are the ones implementing it. And this is why I made the reference to Atlas Shrugged really in my post, because in that society, there's just this like detached from reality, sort of corrupt. I'm not saying the Norwegian politicians are corrupt per se, but they have like such a distorted worldview where you just say, oh, if you run a company, you're borderline evil no matter what. And like you should pay your taxes no matter what. And like you should shut up and, just take it. And then when you actually bring them a factual real world case of this, they point blank even say that it doesn't make sense.
Well, I have a maybe cynical idea for how you should pay that tax. Well, you could sell a portion of the company to pay the tax and use that cash to pay it. And then actually you could make it even simpler. Maybe instead of that third party that you sell that equity to, maybe you could just sell that equity directly to the government and have that cover the tax. And so then maybe you sell a little bit more to the government every year to cover the tax. And then at the end of the day, your company's been nationalized.
Indeed. I mean, this is implicitly or explicitly what's happening. If you stay in Norway, you have to either sell or take a dividend. And so the government is basically, confiscating a little bit of your company every year. And that's why, again, so many are moving, because it's explicitly better to own a Norwegian company being based outside of Norway. It's like no doubt that if you're not in Norway as an owner of a Norwegian company, the company is better off because you can actually retain the money in the company, invest.
Well, so if the company is still a Norwegian company, but you as the owner are outside, and if you're living outside, they can't tax you.
Yeah, so the wealth tax is on you personally, not on the company.
It's on you personally only if you're a resident. So it's not like the US where they give you global taxation.
No, so you, according to like all these standard bilateral agreements, like you can move out to another country.
So Dune is still a Norwegian company.
Dune is still a Norwegian company, yeah.
And do you think that Norway is going to suffer as a result of the exodus of a lot of its great entrepreneurs, or do you think it'll make no difference?
So long term, definitely it will suffer, and it's very bad for I think Norwegian people that there will not be new value creation in Norway. But short term, they will be okay because there's so much oil wealth, and this is the paradox of the whole thing, where instead of saying we have the ability to not take that much taxes because we have all this money, we could stimulate people to work and invest and build and take risk and all these things. They're doing the exact opposite for like very strong socialist ideas, where it's like, oh, no, everybody that like, makes a high salary or like tries to build a company, like we should just take their money because like we need equality in these things. Short term, they will probably be fine in terms of the government will keep spending a lot of money and can have lavish services and be very inefficient, and people still, the oil can't move, the fish can't move, there's going to be there. But over time, there's not going to be new industries, and it's going to be a long-term problem, but it could take a long while before it really hits.
So you work in this crypto industry where we talk a lot about architecting new economic systems and governance. How has this experience shaped your personal views toward what proper economic governance should look like?
Good question. I don't know if there's a direct link between crypto. I think the good thing about crypto is it's pro-innovation, it's pro-building, it's global, it allows you to to create things no matter where you are. Like, we started Dune out of Norway. We've become pretty successful, and I think it's been an industry where it's so global that it actually really doesn't matter that much where you are, which I think is fantastic. It's a huge thing that you don't have to be based in the Bay Area or here or there to actually create something valuable. I find that part of crypto very exciting and very, something I believe in. And of course, in Norway, you're being punished for building, and I think a sort of global system for anyone to innovate and create freely is amazing for mankind, and the opposite of like being told you can't do this or you can't do that. So in that sense, it does reinforce my belief in the crypto ecosystem. Yeah.
I think that's a perfect place to leave it. Thank you so much. This was great.
Yeah, thank you.
Thank you for listening to this episode of Endgame. Please follow me on X, Amanda Cassatt, 2 S's, 2 T's. Follow the company I founded, Serotonin HQ, and listen wherever you get your podcasts, YouTube, Spotify, Apple Podcasts, the works.